Thank you, Yusuf. Good morning, ladies and gentlemen. Thank you for joining us today on this earnings conference call of IMFA, Indian Metals and Ferro Limited. I am Arvind Dana from Veritas, and I am delighted to be your host for this session today. We have some exciting updates to share with you as we present and discuss the financial results for the quarter ended 30th June 2023. I am pleased to inform you that IMFA's market valuation has reached a significant milestone nearing INR 2,000 crore, up from INR 1,500 crore since our last earnings call in May this year. This accomplishment underscores IMFA's position as India's leading fully integrated manufacturer of quality ferrochrome in the metals and mining industry. We have already shared the results with you, and they are accessible on our company website and the stock exchanges. However, I would like to remind you that our discussion may include forward-looking statements that are subject to known or unknown risks, uncertainties, and other factors. To provide you a comprehensive overview of our Q1 performance and address your queries, we are privileged to have esteemed members of our management team present today. Let me welcome Mr. Prem Khandelwal, CFO and Company Secretary, Mr. Vijayananda Mohapatra, Chief Operating Officer, Mr. Deepak Mohanty, Head Ferro Alloys Business Unit, Mr. Binoy Agarwala, Head Power Business Unit, and Mr. Sandeep B. Narde, Head Mines Business Unit. Now we will begin with a brief summary of our Q1 performance for the quarter ended 30 June 2023, following which we will open the floor for a Q&A session where you will have the opportunity to interact directly with our management team. Without further ado, I now hand over the call to Mr. Prem Khandelwal, our CFO and Company Secretary, to take us through the financial highlights. Over to you, sir.
Thank you, Aryan, and good morning, ladies and gentlemen. Financial results, as expected for Q1, is much better than Q4 of last year, with EBITDA of 183 crore compared to 143 crore in the Q4 of last year, and PAT of 110 crore compared to 64 crore. Production and sales numbers. Production for the quarter Q1 FY24 was 66,261 tons as compared to 61,200 tons in the previous quarter, that is Q4 of FY23. Sales is around 64,695 tons compared to 57,362 tons. And the prime realization was 1,15,825 rupees per ton as compared to 1,16,558 rupees per ton. EBITDA cost for the quarter was 81,044 rupees as compared to 86,686 rupees. With that, we can now start the Q&A session to address your queries.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Aditya Rati from Equitas Investments. Please go ahead.
Yeah, thank you for the opportunity, sir. This is Shubham from Equitas. So my first question is related to the realization. So since June, we have seen some decrease in realization of ferrochrome. So how it is currently trending and how it is expected for the next 3 to 6 months?
Let me answer. I'm Deepak Mohanty speaking. Okay, actually, present market scenario is subdued due to the demand issue, and it has already gone down. Compared to the last quarter, it will be 5-6 cents down certainly. Already it is below $1. But we can't predict beyond this quarter because lot of variability and there in the market. So basically how it will pan out in China, it all depends on that. They being the major producer and consumer. So, but considering the cost pressure on the producing side, production and all, so things are going to look up, and as you must be aware, Chinese government has already started taking a lot of steps to revive the demand. So particularly interest rate lowering, lending rate lowering, and easing out mortgage rules for buying people to buy houses and all. So with all those things, probably next quarter will go, but nothing can be predicted.
Okay. But for next quarter, we can expect a slight decrease in average realization compared to this quarter.
Absolutely.
We can expect little low realization, but as the cost is also going down.
Yes.
Yeah. So my next question was on cost only. You mentioned that 81,000 was cost per ton or
yes.
So how much can we expect this to decline?
Difficult to predict, but I think it can go down by another 2,000-3,000 rupees a ton.
Okay.
Because coke cost is coming down. We have recently procured coke at $316, which we used to be $480 earlier. So coke cost is coming down. Coal cost has already come down quite a lot.
Right.
So if this price realization goes down a little bit, the cost will also come down.
Right.
So maybe we would be able to maintain the margins.
Understood. So when it comes to cost, both coal and coke cost, as you rightly mentioned, are coming down. But now, given that it has stabilized to some extent, once we are, once we have consumed all our inventory of the last 3-4 months, what is the average cost per ton that we can, stabilize at?
The cost is, you need to understand, we are the coke inventory, whatever we are buying, that will be used, say, after 3 months or 6 months.
Correct.
So as of now, in the current quarter, we are using high cost inventory of $475. Right. Which will gradually go down to, say, 400, then 350, then 300. So very difficult to pinpoint cost as such, total cost, EBITDA cost, but gradually it will come down.
I understand that. What I'm trying to understand is, given that coke cost is close to 300 and coal cost has also gone down substantially. So if we take the current prices of coke and coal, what should be our cost of production? But I'm asking hypothetically.
No, we need to work out, because if we take $300, because right now the 81,000 cost, whatever mentioned, it is taking care of $475 coke.
Right.
So if you take $320, so that kind of saving would be there.
So
we can't predict the reduction in coal cost.
Yeah.
But coke cost at least we can predict.
Got it. So it can go down as low as 70,000 to 75,000 per ton, right? In the current prices.
No, maybe around 75,000, not below that. See, $120. If you take coke cost, $120. So that would be roughly 9,000 rupees a ton, and we use half a ton per ton of ferrochrome.
Right.
So 5,000 rupees reduction can be there.
Got it. No, fair enough, sir. I understood completely now. And lastly, sir, on the money that we are expected to receive on the Utkal coal, so what is the current status on that?
Current status is that they had issued a notice to secure creditors, and 30 days time was there, which expired on 19th of July. Okay. And they had asked for valuation report from IDCO, which has already been given to them. So now I think it's a matter of time. Can't predict the exact timeline, but it should come sooner now.
Okay. So, sir, recently there was an article which said that a lot of the coal, recently which has been auctioned, companies are finding it difficult to raise financing for those blocks. So, is this a reason why things are getting delayed for us?
No. That cannot be a reason for this, because this is being done by nominated authority at Government of Ministry of Coal level.
Okay.
It has nothing to do with the company's performance or company's handling of the block.
Got it. Fair enough. And lastly, my question was, so recently, Ferro came out with an announcement that from 15 July, they will stop production. So how does this help us in, realization or supply-demand scenarios?
Deepak?
No, I don't think it will affect, because they mostly produce very less quantity and sell in domestic, while our major focus is on export. So only thing, demand has also come down in India, which has to go up. So with that only, so that's why domestic prices also have come down. So that will more or less increase. But main thing is China. Unless China revives, sentiments cannot go up and prices moving up will be difficult.
Understood, sir. That's it from my side. Thank you for answering all.
Thank you, Shubham.
Thank you. The next question is from the line of Mr. Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and thank you for the opportunity. Sir, if you could mention what was our coke consumption rate for Q4, that is the March quarter, and the Q1, and the likely for Q2.
Consumption cost you mean?
Yes, sir. What cost we have booked the coke consumption rate in the raw material basket?
Coke consumption cost or the buying price you are asking, Saket?
No, consumption cost.
Consumption cost for Q4 was 47,800, and for Q1 it was 42,500.
And what is it likely for Q2?
Q2
will be slightly down, around 1,000 rupees down.
Come again, sir, Deepak sir?
It will be around 1,000 rupees lower than the Q1.
Okay. And what will be the coal match look like for Q1 versus Q2?
Variable coal cost you are talking about?
Yes, sir. The
Coal cost for Q1 was 2 rupee 80 paisa as compared to 3 rupees 01 paisa in Q4.
And Q2, sir, what should be trajectory?
It should be same, more or less same.
Okay. Sir, coal we are using only for the electricity generation.
Yes.
Correct. So the 2.80 would be the cost for Q2 also.
Yeah.
More or less likely to be same.
More or less it will be the same. Right. And for Q2, sir, how are the deliverables likely? And secondly, sir, for POSCO, now things are normal, as has been the case with Q1. Whatever the committed quantity shipment goes to them on a quarterly basis, I think 7,000 tons. That is what it is being maintained as now?
Yeah, it is maintained for Q3 also. Yes, it is maintained at 21,000 level for Q3 this quarter, running quarter. We finalize on quarterly basis, so it has been finalized.
And so once again, if you could give the mix between spot sale and the contracted.
Pardon?
Okay, the sales mix between the contracted one and the spot sale. That will be
65% is basically all long-term you can say, and 35% is on spot basis.
Okay. And for this quarter, sir, how much is the realization down from Q1 for the contracted price?
So as I was telling,
giving
overall, if you see, yeah.
Giving the number will be very difficult at the moment, because we'll come to know at the end of the quarter only. But overall trend seems to be little moderate than Q1. So is the cost also.
Okay, sir. And sir, what was our
EBITDA per ton?
Yeah, last point, and I'll come back to you. Yes, sir. Only small point. EBITDA per ton, what you mentioned, sir, if you could repeat.
EBITDA per ton 81,044.
Okay, and this is what the trajectory is likely to for this quarter, or abhi bhai batana mushkil hai, sir?
नहीं, वो तो बोलना मुश्किल है अभी तो.
अभी अच्छा सर, लेकिन अभी जून और जुलाई में एवरेज यही रहा है मोटा मोटी, कि इसके थोड़ा ट्रेंडिंग लोअर है?
क्वार्टर का फिगर हम बता रहे हैं आपको. दिस इज फॉर Q1. Q1 81,044 rupees.
I'll join the queue, sir, for follow-up.
Thank you. The next question is from the line of Mr. Ashif Patel from Molecule Ventures PMS. Please go ahead.
Congratulations, sir, to the entire team for excellent set of numbers. My question is, sir, as you explained in detail that the coal cost is likely expected to be similar to the Q1 for Q2 as well, and similarly coking coal is expected to be down by only 1,000 rupees per ton. So then how do you expect the operating cost to come down by around 3,000 rupees per ton?
For Q2, I have not mentioned 3,000 rupees a ton. This is for the entire year. We are predicting the coke cost by 5,000 rupees a ton.
Okay, got it.
Not for Q2.
Okay. And what would be our, sir, blended coking coal cost on books right now?
Sorry, I didn't get you. Coking coal cost blended?
Yes, sir. Yes, on our inventories.
So it will be something. So in this quarter, last quarter, it will be around 455 to 60. So if you look at, because we use some quantity of other coke and the things, so and which will go down by, as we have mentioned, it will be something like $440. It is not going to come down drastically because the one we have booked, so that will come, and the effect of that comes after 2 quarters.
So the benefit of reducing,
because what we have booked now, that will come towards middle of December, because September end it will be dispatched from Colombia, then it will voyage time, then clearance and movement, and actual usage, if you say, it will be 2 quarters away from now.
Got it. So sir, even assuming that our operating costs come down a bit for Q2, given that there has been volatility in the realization for ferrochrome, can we expect on absolute EBITDA terms Q2 to be somewhat softer compared to Q1? Even if margins remain?
Could be little softer than Q2, but again, we were repeating this point again and again that in our company, one should not look at the quarterly basis.
Absolutely.
It's a long-term play, so you need to see on the yearly and 3-year and 5-year basis. It's quarterly very difficult because so many fluctuations, the price fluctuation is so much, very difficult to predict anything for a quarter.
Sure. And sir, as you mentioned that nominating authority has already given the valuation report. So can you please mention what is the valuation decided by the independent authority? Regarding our coal block? Yes. Regarding Utkal C?
No, we don't have the number, but we understand that whatever we have invested, we are going to get back the money. There may not be any write-off.
Sure. Got it. Okay. And sir, what would be our power cost for Q1?
Variable cost for Q1 is 4 rupees.
4 rupees,
yeah.
4 rupees. And versus Q4?
Q4 it was 426.
And it is expected to remain 4 rupees only, even in Q2, right?
In Q2, the variable cost may go up by 15 paisa just because we have scheduled some plant maintenance in Q2.
Got it. And sir, given that the global scenario of ferrochrome prices, given that Chinese chrome ore inventory of UG2 are at record high over last 7-8 years, and given that South Africa may also face a challenge because of the ongoing winter season, how do you expect the ferrochrome realizations to pan out? I understand in near future the realizations are down by around 15,000 rupees per ton, but how do you expect the trajectory going forward?
No, first of all, the Chinese inventory of UG2 chrome ore is not record high. It is around 2 million ton, which is
record low. I meant record low. Sorry.
Yeah, it is record low. So mainly because of the volatility in the market and demand pickup is not there. But once it pans out because of the Chinese government intervention, and also as you know, Europe already it is summer vacation and all, and a lot of people because of the demand and supply not in tandem, some steel mills have taken maintenance schedules and other things. So we expect demand first, the demand and supply need to be in tandem. Then only the price movement will up because this is not a sustainable price.
Sure. So whenever the prices, do you think that at current realization, given the ore cost, the players which are not integrated globally, they might be just making a single-digit margin, but much lower than the usual?
Yes, absolutely correct. And even in the domestic, if you look at the last OMC auction, there the prices are between 5,000 to 3,000 in different categories. So chrome price in domestic in OMC auction also has gone up. So this is putting cost pressure for everybody. Because we have integrated with little leeway and other that thing, but otherwise the present price is not sustainable for a non-integrated producer.
Got it. And given the low ore inventories in China, any price rise is expected to sustain. Is it correct understanding? Ferrochrome price rises are expected to be structurally sustaining.
It is always expected and government interventions are going on. As I was telling, there was interest rates have been decreased twice and the mortgage rules have been slackened so that people will go for investment in housing. So all those things are going on and further steps also Chinese government is working out. So with all those things, I look a positive scenario ahead, but it may take little time.
Sure. That's all from my side, sir. Thank you for detailed explanation and all the very best.
Thank you.
Thank you. The next question is from the line of Mr. Kushal Kedia from Walford PMS. Please go ahead.
Yeah. Hi. Sir, just wanted to understand, our 90% is exports, right?
Yes.
Yes.
And 10% is domestic.
Correct.
So I just wanted to get a sense, sir, how much are we supplying to Jindal Stainless approximately, if possible to give that breakup?
Jindal Stainless, we are not supplying anything, to be very frank. They used to take quite a bit quantity earlier, but as you know, they also have ferrochrome production capability. And they are buying and they are also doing some tolling through Tatas and other things. So they don't require ferrochrome. They are not buying from us any material at the moment.
Okay.
Because their Hisar production mostly they were taking for Hisar production where they have reduced the capacity, not doing, but rather they are getting billets and other things and then basically other grades are they're making. So they don't require at the moment. We are not supplying any quantity to them at this point.
Okay. Sir, I just wanted to get a sense that can the share of domestic go up in the near future with domestic volumes staying the same, with the export volumes staying at the same level?
So actually we don't have any, because already we are tied up, as you are telling, 65%, others 35% is there. So wherever it will be viable, we go for that.
No,
unless our additional capacity comes up, which is ahead in 25, till then we don't see much unless the market scenario, that 35% what we play, depending upon the market scenario.
No, I didn't understand. Sorry. 35% of what?
We as I have mentioned earlier, our contract rate, our long-term supplies are almost 65%. Okay. And balance 35 we sell on spot basis.
Okay.
So in which something in Europe, something China, something other places, Taiwan and other.
Deepak is talking about the supply in Indian market. So he's asking.
So that is what I'm telling. There is no more
in Indian market.
So the capacity ramp up will happen by 2025. So most of the capacity will be used for domestic. Is that what you're saying?
No. That is what not he's saying. That we are supplying around 10% in Indian market now.
Correct.
Going forward also, I think it is going to be more or less same. Yeah.
Okay, no, so because of the Indian infrastructure push and as you can see, there's demand for massive stainless capacities. Even Jindal Stainless declared the results yesterday. Their volumes were up quite a bit. So I'm just trying to get a sense about how much will we contribute, or how much will we benefit from this infrastructure demand.
No, in Indian market, I don't think there is any expansion in the stainless steel sector. So unless the stainless steel sector expands, we cannot cater to Indian market here.
Okay, unless stainless steel expands.
Yes, because the consumption is in ferro in stainless steel. So in India, I don't think in near future any expansion is going to happen.
But if you see Jindal Stainless volumes are going up. Yesterday in their results, year on year, if you see their
capacity utilization may, I don't know about that, but their capacity utilization may have gone up. Mm-hmm. But are they going for any expansion? I don't know.
Mm-hmm. Okay. So you are not seeing any major tailwinds from the domestic? No increased inquiries or something like that?
No.
Okay, that's it. Thank you.
Right, thank you.
Thank you very much. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. Our next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, sir. Good morning. So, if I heard you correctly, then you said the domestic demand is quite subdued right now, correct?
Mm-hmm.
You're facing some headwinds over there, okay. You also said, so quarter on quarter, it's difficult to forecast anything. But then on a yearly basis, you think the exports, which is your majority of the business, that will be more than sufficient to capture a good growth for the year? So do you have any targets and expectations? What will be your revenue and margins at the end of FY24, if you can help me with that?
Yeah, FY24 is more or less likely to remain same as FY23. With top line, EBITDA and PAT, more or less likely to remain same.
More or less the same, okay.
Yes.
So what's the reason behind this? I mean, but because if exports is doing well, then is it not expected to grow further?
No, the price is coming down, so is the cost. So we are likely to maintain the margins.
Right.
But if the price goes up, then obviously the margins will improve further, and the top line and bottom line both will improve. But it all depends. It's very difficult to predict anything at the moment.
Right. Because of fluctuations. Okay.
Yes.
Okay. All right, sir. Thank you, and all the best.
Right.
Thank you. Next question is from the line of Manish Sehgal, individual investor. Please go ahead.
Hi, good morning. Sir, I just wanted to understand, we have raised about 1 lakh ton extra chrome ore. What are we going to do with that? And secondly, is there a shipment which has slipped into the next quarter this time also? Because there was one which had slipped to this quarter, and I see sales are lesser than production again. So just wanted to get those 2 inputs.
Sandeep, regarding chrome ore, can you explain?
Yes. So in Q1 we have produced more from Sukinda open cast. It was an opportunity because monsoon delayed by 8 to 10 days. So we enjoyed that opportunity. But now monsoon has started and we may produce as per our budget this quarter. And already all that ore will be because we are producing limited capacity throughout the year. So that will be consumed in our ferrochrome plants as per plan.
Deepak, regarding the second question, you can answer.
So second question was on what exactly?
Shipment.
No. Actually, there is no shipment delay which has come to this quarter. So it was not that minor, maybe 1,000 ton or something, but it is not major. So this will be purely this quarter production and mostly and the dispatches that will.
But if we see last 2 quarters, the production is higher than the sales, so we will have some inventory left over, right?
So we have some inventory of different materials which we are liquidating also. So it is not, but our inventory had gone down, particularly at POSCO because they were not taking, so which was created. And as per our commitment and contract, we need to maintain 1 month stock at Pohang in our warehouse. So that is why that point in time it was lower, but now it is all stabilized and in the normal inventory level. We don't have additional which can be really exported at or sold out.
Understood. So we have some inventory sitting with us in POSCO's warehouse.
Yeah, which was taken out because of the POSCO's force major thing, but again we had to bring back that after they started resumed from January second half lifting.
Sure, understood. I understood the concept. Is there an opportunity?
Sorry to interrupt, Mr. Sehgal. May we please request you to join to the question queue for any follow-up questions?
Operator, it's related to the chrome ore question which I had asked, so I'm just asking an add-on there. So is there an opportunity to sell chrome ore outside, sir, if we have the opportunity to raise more in case of what we raise more than what we need? Are we allowed to sell outside?
Normally we don't do that. Normally we don't do that because we plan the raising as per our requirement only. Okay.
Because, if we are able to do 2.5 lakh again, then we have the opportunity to sell outside, which is quite.
No, but this inventory, whatever extra inventory we have raised now, that will be used in rainy season when there is not going to be any production that time. So overall for a year, we plan as per our requirement only.
Understood. Thank you.
Okay.
Thank you. The next question is from the line of Sagar Gandhi from Future Generali India Life Insurance. Please go ahead.
Sir, if you can please repeat the Q1 and Q4 sales volume number and realization.
Q1 and Q4.
Yes, sir.
Q1 is 64,695 and Q4 is 57,362. Price realization for Q1 is 1,15,825 and for Q4 it was 1,16,558.
Thank you so much, sir. That is it.
Right. Thank you.
Thank you. Next question is from the line of Anant Mundra from My Temple Capital. Please go ahead.
Hello. Yeah, thank you for the opportunity, sir. So for the expansion project at Kalinganagar, how are we planning to meet the energy requirements for the plant? Would it be 100% hybrid renewable or would it be a mix of hybrid renewable and thermal?
Bijan would answer that.
For Kalinganagar, actually we are required around 56 to 58 megawatt. We are putting the one gas plant there, which is we are using the CO gas generated from the furnace because we are going to set up a closed furnace. The rest 50 megawatt will go for around 60% from hybrid and 40% from our thermal plant at Chaudhar.
Okay, so there will be no new thermal plant. It will be the existing.
No, we are not going to set up any new thermal because government is coming up with renewable energy obligation.
All right. Okay, thank you, sir. That's it from me.
Thank you.
Thank you. Next question is from the line of Chirag Singhal from First Water Capital. Please go ahead.
Thank you for the opportunity. Sir, I actually wanted to understand on your coking coal cost. So you mentioned that the consumption cost was around $450. Now, when I look at the Australia origin hard coking coal prices, I'm just not able to figure out how our prices are so higher despite, the correction has been very steep in the last couple of months. Even if I take the second half average price of FY23, the Australia origin hard coking coal price was sub $350. So is this the right comparison to look at the Australia hard coking coal price or so can you just throw some light on this?
First of all, this hard coking coal, what price you are telling 350? Yes, it is correct, 350, 330 and all those things. That is coking coal. But we are not using coking coal, we are using coke. Okay, so when you convert coking coal to coke, then there is a 70% recovery, all those things for which prices normally goes up. And second thing, we don't buy from coke or coal from Australia. We buy Colombian coke, which is low cost, which is our requirement, ultra low cost. So that basically, depending upon the demand scenario situation, prices move up and down. And the thing I was telling that what we finalize now normally used after 2 quarters, because what we finalize now, that comes after around 2 months later, shipment happens from Colombia and it takes 45 to 50 days to arrive India, then discharging, moving to plant and actually in that month. That way, if you look at it, becomes 2 quarters. So that is why I told at the moment our focus is high and it will go down in Q4 and Q3 and Q4. Is it okay? Or anything you want to?
I got your point. Are you contemplating any different strategies in order to reduce this 6 months lag that we're currently having, or is this something that we'll have to work with?
This is what we have to work with because domestically we don't get ultra low cost coke which we require, and also Australia or China. So that is why we need to work in this manner.
Got it. And just to confirm on the cost per ton based on the current prices. So you mentioned that considering the current cost of coal and coke, the cost of production should be somewhere around 75,000 rupees per ton, which was 81,000 rupees per ton. Is that correct?
No, that is for the year I told. Maybe for the year it will come down, but not for the...
I'm not talking about Q2. I'm just talking about if you consider the current prices of both the thermal coal that you use in your power plant and the coke. So if you take the current prices, then the cost should be around 75,000 rupees per ton. Is that right?
Yeah.
Okay. So just one last question on the volume side. So are we expecting similar volumes as FY23 even for the current fiscal?
Yeah, we are targeting 250,000 level. So same level of maybe little more than the FY23. It will be around 250,000 tons and volume.
Okay. Got it. Thank you so much.
Thank you. The next question is from the line of Akhilesh Bagri, an individual investor. Please go ahead.
Hello, good morning. Congratulations on a solid performance, sir.
Thank you.
Sir, I just want to confirm around which quarter will the new capacity come online, of which financial year?
Bijan?
That will come one by one. We are targeting to 2025 April, and another is around 2 to 3 months after stabilization of number one.
And will it be 50,000 or how will it?
Yeah. Each capacity is 50,000.
Okay.
There will be 2 furnaces. So
okay.
Each furnace has a capacity of production of 50,000.
Okay. And sir, what will be our strategy in terms of selling this? Is it also going to be like 2/3 contracted, 1/3 spot, or have you thought something on that?
Mostly it will be in that line.
Okay. And we don't see any challenge.
However, we need to see how is the market and other things. So the where it will be. So all those things is dynamic, can be told that from the right moment. But we have opportunities best because of our performance in the international market with many companies, steel mills and all directly. So we have the opportunity to increase also the long-term quantity at different places.
So basically, we don't see any challenge in placing this quantity once it comes online.
Yeah.
Okay. And sir, what kind of peak debt would we perhaps have in order to fully fund this expansion? Because we will have a lot of cash flow generation in the next 2 years. Also, maybe money will come from Utkal. So, just your thoughts on what might be the peak debt.
No, as of now, we are planning all from internal accruals only. We are not planning to raise any debt.
So, we may be long-term asset.
Yeah, this investment is spread over a period of 6-7 years. So, we expect enough cash flow to generate during that period to meet requirement.
Okay.
So
all
as
right.
of now, as of now, we have not planned any debt raising for the expansion.
Okay. Noted. Thank you.
Right. Thank you.
Thank you. Next question is from the line of Josha from 7Cs. Please go ahead.
When this is regarding Utkal fee, I understand that the Utkal fee compensation is not 1 + 1 = 2. For land investment from 2014, we are entitled to 12% interest rate per year. It means suppose the compensation payment is delayed, we continue to earn interest on the land investment. So do you expect final compensation to be more than our investment in Utkal of fee of about 350 to 75 crore rupees?
No, that is difficult to predict, Joe Bhai, because you see, there are many components they are going to disallow also. So maybe whatever interest we are going to get, that will compensate for the disallowance portion. So that's why I said that we expect the investment amount to be recovered, more or less. We don't expect any write-off.
Yes. But can we expect more also? Is it possible?
No, that is difficult to predict.
But there is possibility also, right? Because of delay, we earn more interest also.
Yeah, but that interest meter is stopped from October last year, because after the vesting order they are issuing, the interest portion is not accruing anymore.
Okay, I understand.
Yeah.
Now, Deepak, yesterday, one question for you. Yesterday, MD mentioned that in 5 to 6 years, we plan to raise our capacity to 10.50 lakh tons of chrome ore. And our new furnace capacity will be commensurate with ore raising. So looking at new Kalinga, new first capacity of 1 lakh ton, I think there is still scope to have furnace from another 70,000-80,000 tons. Next project after this 1 lakh ton capacity is achieved, we can have one more furnace, one more project.
Bijanand, would you answer that?
Bijanand can.
Yeah. Actually, in our mining explosion, after 5 years, we are going for underground mining. From there, we will go for up to 10.5. So initially, we are putting 1 lakh ton, for which around 2.5 lakh tons is required. That we are building up now.
Right.
So after say 5-6 years, so towards 2020 and 29, we will go for another setup or acquisition. At that time, we will think.
Okay. Thank you.
Right. Thank you.
Thank you very much. Our next question is from the line of Mr. Saket Kapoor from Kapoor & Company. Please go ahead.
Yes. Prem sir, I missed your comment. You mentioned that FY24 profitability will be in the similar line to what FY23. Did you commented something like this?
Yes.
I missed you.
Yeah.
Okay, sir, because when we look at the last year performance, the PBT numbers were closer to were at 340 crores. And we have done PBT of 150 for the first quarter itself. So this means that we are indicating or we are anticipating lower numbers for the coming 3 quarters that will themselves be cumulative to closer to 340.
See, as I said, Saket, in our company, projecting the quarterly numbers are very difficult.
Right.
Okay, so we need to see on the yearly basis only. That's why I said that looking at the current price trend and the cost trend, we expect the profit margins to remain same for current year also compared to last year. So quarter on quarter predicting is very difficult.
That is correct, sir. But that is pointing towards if we have the first quarter as a heavy quarter and we are predicting that we will be closer to last year number, that means that the trend is going to be lower for the remaining 3 quarters.
That is for you to extrapolate.
Okay, sir. Sir, and how are the shipping costs currently trending, sir?
So it is shipping costs have come down because of as already I told, demand is not there. So it has come down to the earlier normal scenario, and it is continuing. Not much difference. It is not at high like earlier. It is more or less stable and range bound.
Okay. And 2 last questions. So firstly, sir, what are the key factors that has enabled us for this kind of expansion, sir? We have been able to repay our debt. We don't have any long-term debt currently. And also the Utkal C litigation coming to an amicable solution in our favor as of now. So barring this, what has resulted in decommitting capex for the expansion, wherein we have so many variable factors pertaining to the offtake, pertaining to the realization, barring the chrome ore, which is the key raw material, the other factors are not in our hand. So what has led to this commitment of around 1,500 crore capex over a 5 to 7 years down the line? So if you could elaborate on the same.
No, you mean to say we should not expand?
No, I am not. Sir, I'm only trying to understand.
So if you have to expand, then we have to put up furnaces also, because we are expanding our chrome ore facility. We are expecting more ore from the underground mines. So that's why we are putting up more furnaces also. And the biggest strength in our company is that we are integrated, fully integrated. So any point of time, we are going to make money. Even at the bottom of the curve, we are going to make money. So why should we not expand?
But these factors were there for us 2 years earlier also. Or
yes, 2 years earlier also. But that time we were debt heavy. We were not in a position to raise further debt.
Right.
Now we are debt free.
Correct.
And the situation is much better compared to COVID years now.
Right. Correct, sir. And sir, currently, what is our working capital requirement and the cost of fund there, sir?
As of now, we are net debt basis. We are on a almost at a zero level. So not much requirement at the moment.
Correct, sir. Thank you for the
right. Thank you,
reply, sir, and all the best. Thank you. No, sir.
Thank you. The next question is from the line of Josha from 7 Seas. Please go ahead.
Will you please confirm my understanding regarding Kalinga expansion project? Our power requirement is 58 megawatts, out of which 40% will be coming from our captive thermal plant and 60% by way of new renewable energy. Is it right?
Yes. Yeah.
Okay. Thank you. Yeah.
Right. Thank you.
Thank you very much. Ladies and gentlemen, this was the last question for the day. I now hand the conference over to Mr. Abhishek for the closing comments.
Yes, thank you everyone for joining us today on this conference call. We have had the opportunity to share our exciting plans for Imphah's future growth, and we are truly optimistic about the year that lies ahead. On behalf of the company's board of directors and management, I extend our heartfelt gratitude to each one of you for your active participation in this call. Your interest and questions have been invaluable to us. If you have any further inquiries or require additional information, please feel free to reach out to us or to my colleague at aryan.rana@veritasreputation.com. We are always available to address any queries you may have. Thank you once again for being a part of this conference call, and we look forward for a promising future and continue to grow ahead. Thank you and have a great day ahead.